Get this question from time to time during tax season. If you're married, is it best to file jointly or separately? I've got that answer and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so I love tax planning. I mean, such a geek, right? So we all have to file our taxes. If you have income, you got to file your tax return and sort of reconcile all that. Make sure that you had the right amount of tax paid in, and if you paid in more, you get a refund. If you didn't pay in enough, you owe at that point. But I mean, that's all well and good, right? You're required to do it. Tax planning, though, oh, that's the sweetener, right? That's where you look at what opportunities exist for you to improve your tax situation. So pay less tax this year or pay less tax over your lifetime or maybe multiple generations. You explore those strategies, what options exist out there for you, and then you implement the ones that bring synergy to your overall financial plan. It's a beautiful thing. So we do a lot of tax preparation at our firm. It's because we do a lot of tax planning. And with all of that tax activity, we get this question from time to time every single tax year, and that is, listen, you know, we're married and we file a joint return. Is it better for us to file separately, or should we continue to file jointly? And fair question, I get it, because you want to pay the least amount of tax and get all the deductions and credits that you can. And so, well, I've got the choice. You know, we're happily married. What's the joke? Been happily married for 25, 30 in total, something like that, right? So, but you're married. You can file jointly or you can file separately. Which one is best? Just as a blanket statement, it's by far, it's most common where it's going to be best for you to file joint. There's really no longer a marriage penalty from a tax standpoint, and when you did the math, it wasn't a marriage penalty that applied to everyone. It's just a sort of unique way in which some exemptions worked, and that's the old tax rules. So that's gone away, and ultimately, if you don't fit into one of just a couple of circumstances, it's going to make the most sense for you to file jointly. So there are just a couple of circumstances where maybe filing separately would make sense, but these are very rare, and you're normally giving something up as well. So it's not just, oh, this is by far the best thing for you. There's typically something you're giving up. What are some of those scenarios that, you know, it may make sense to file separately? If one of you has a major health out-of-pocket expense, which again is more and more rare because health insurance, pretty much everyone is qualified, everyone has coverage these days. And so, or if you're doing income-based repayment, an income-based repayment strategy for student loans and wanting to pay as little as possible in hopes that the balance will get canceled after a certain amount of time. That's a reason maybe to married filing separately, but it's very, very rare. If you're working with a CPA, a firm that actually is doing your return and you're curious, you can have them do a breakdown, a comparison to see which one's best. But gosh, in the vast majority of circumstances, you're going to realize it's better. You're better off to be married filing jointly. That's going to be a better approach. Plus, like I mentioned, you give something up when you do married filing separately. What are the three big things that you give up? First is essentially you give up the ability to make a Roth IRA contribution. If you do married filing separately, even if you take a look and you do the math or you work with your CPA and you weigh it and say, actually, in my unique, rare circumstance, it's better to do married filing separately, you essentially cannot fund a Roth IRA. I've got one client that I'm helping with right now where it is in their best interest from a student loan standpoint, all that, where they're married filing separately, and he's maxing out his retirement plan. He's been able to excel at his job, and he's maxing out his 401k at work. He can't contribute to a Roth IRA. Take a look at these income phase-out thresholds for the Roth IRA, and you'll look, and married filing separately, your adjusted gross income needs to be below 10 grand. Below 10 grand in order to contribute to a Roth IRA. That's going to weed out just about everyone. And therefore, one of the byproducts, consequences of married filing separately that maybe you didn't know is you effectively can't contribute to a Roth IRA. One of the other drawbacks with the married filing separately filing status, and this is where when you actually do the math with your CPA, if you wanted to ask them to do it, it's where likely it will show that it's not advantageous to you. And that's because when you're married filing separately, your tax brackets, while your tax rates are the same, the tax brackets are much smaller. They go back to what it would be if you were a single filer. Take a look here that if you're married filing jointly, it's the first 20 grand in change that's taxed at 10%, and then from the 22 grand to 83 and so on is taxed at 12%. But for married filing separately, it's the first 11 grand is taxed at 10, and then from 11 to in your mid 40s is taxed at 12. So it's a much smaller range, a much smaller amount of income before you start having to pay tax at higher rates. And so this will be part of that mathematical equation. But for many people, if you're both working or even just one of you is working and there's this curiosity, well, should I married filing separately? Likely what it's going to mean is you're going to reach a higher tax bracket and have more of your income taxed at higher rates than if you marry filing jointly. And then the final kind of obvious and clear reason why for most people it's advantageous if you're married to file jointly instead of filing separately is when you file separately, you give up the ability to use certain tax credits. Now, these don't apply to everyone, but they're meaningful. Deductions are good. It's a percentage reduction in your tax bill. But a credit is great. It's a dollar for dollar reduction in your tax bill. So the simple fact that you, as married filing separately, cannot claim you are not eligible for the child and dependent care credit. I mean, that's a significant change. Yes, it was a huge credit in tax year 2021, and they've changed it for tax year 2022. But we're still talking $2,000-$3,000. It could be at stake that you're not even eligible for that tax credit if you're married filing separately. Same thing if you've got kiddos in college. There's no American Opportunity Tax Credit, there's no Lifetime Learning Credit. You can't deduct tuitions and fees, which normally most of us shouldn't do that anyway. You should take one of those credits, but you're not eligible if married filing separately. And then earned income tax credit doesn't apply to a lot of people, but also married filing separately in certain circumstances, not eligible for that either. So I understand the question. If you're married, should you file joint or should you file separately? And you want to know which one is best for you. And the vast majority, and I don't have the stats, but probably not 9 out of 10, probably 999 out of 1,000, it's going to be better for you to on your taxes married filing jointly. But if you fall in these rare circumstances where you might actually want to consider married filing separately, be aware of these couple things that you give up so that you can really have a true apples for apples. What are the pros and what are the cons? Work with your CPA to see if you're curious, they can run that analysis, and work with your CFP to make sure you're capturing all tax planning opportunities as well to reduce the amount of tax that you pay both over your lifetime, even future generations as well. If you don't have a CFP on your team that's doing that tax planning with you, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.